Self-storage loans explained. And self-storage has become one of the most attractive commercial real estate asset classes in the country, with low operating costs, strong cash flow potential, recession resistant demand, and flexible management options. Investors continue to seek opportunities in the storage sector. However, financing self storage properties differs significantly from financing multifamily or office or retail or industrial assets. And understanding how self storage loans work can help investors secure better financing terms, maximize leverage, and successfully grow their portfolios. So, why lenders like self storage? Self storage facilities possess several characteristics that lenders find attractive. It's multiple income streams and short term lease structures, and strong demand during economic transitions, with also relatively low operating expenses and high scalability and a diverse tenant base. So, unlike office or retail properties that may rely on a handful of tenants, storage facilities often generate income from hundreds of individual renters, which diversifies and reduces your concentration risk. So let's talk about some types of self-storage loans. And there's bank loans. And community and regional banks remain one of the most common financing sources. Typical terms range from, say, 65 to 80% loan to value and 20 to 25-year amortization and a 3 to 10-year fixed rate period. Recourse is often required. Best suited for stabilized facilities, local investors, owner-operators. And SBA loans for owner-operated storage facilities that can meet SBA occupancy requirements. SBA financing may be available. And the benefits of those are lower down payments and longer terms, competitive rates. There's also CMBS loans or commercial mortgage-backed securities. And those lenders often finance larger stabilized facilities. And the benefits there are they're non-recourse, they have longer fixed rate terms, and can accommodate higher leverage. And these are really best for large facilities and institutional investors with strong operating histories. But life company financing, life insurance companies offer highly competitive rates for premium stabilized facilities. So some benefits are low rates, long fixed terms, and non-recourse structures. But there's also bridge loans. And bridge financing can be particularly useful for facility expansions or value add projects or projects that need lease up still or acquisitions that require repositioning. And typical terms for those are, say, 12 to 36 months with interest only payments and higher leverage. So let's talk about what lenders analyze. Well, occupancy first. Most lenders prefer stabilized occupancy at levels above 85%. So some questions there might be, what's the current occupancy? What are the historical occupancy trends? And what are the market occupancy levels? Net operating income is our next topic. And NOI remains one of the most important metrics because it's what affects your bottom line. And lenders will review the revenue stability, expense ratios, management efficiency, and future growth potential. But debt service coverage ratio, or DSCR, is the next one. And most lenders require a minimum DSCR of 1.2 to 1.3. The stronger the DSCR, the more favorable the financing options become. But market conditions as well. And lenders analyze population growth and household formation and the new development pipeline for residential. And there's barriers to entry. And markets experiencing strong population growth often receive more favorable treatment. So let's talk about financing a new self-storage development. And development financing is typically more complex. And lenders will evaluate through market feasibility studies, does this make sense? But look at the sponsor's experience and the construction budget and qualify the contractor and look at their lease-up projections. And typical construction financing includes, say, 60 to 75% loan to cost with interest reserves and personal guarantees. And experienced developers generally receive stronger terms. So, some common challenges in self storage lending: oversupply concerns, and many markets experience significant storage development over the last decade. So, lenders will carefully evaluate your existing competition, any new plan developments, and the absorption trends. But lease up risk is up next, and facilities below stabilization often require bridge or construction financing. Management experience. So, first time storage operators may face lower leverage and higher reserve requirements and additional scrutiny. So, let's talk about how CommLoan simplifies self storage financing. And commercial financing can be fragmented and confusing for the end user. And through CommLoan's CUPID technology, borrowers can be matched with lenders based on the property type, the occupancy levels, the loan size, the leverage requirements, the experience level, and the business plan. And instead of approaching banks individually, borrowers gain access to hundreds of lending platforms and programs through programs through a centralized platform that helps identify the most competitive financing options. And CommLoan's lender marketplace includes banks, credit unions, CMBS lenders, life companies, debt funds, agency lenders, and private capital providers. Final thoughts for the day. Self-storage remains one of the most one of commercial real estate's most resilient asset classes. And whether you're acquiring your first facility or refinancing an existing property or expanding your portfolio or developing a new project, understanding lender expectations can dramatically improve your financing outcomes. And the right financing structure can increase cash flow and improve returns and help accelerate long-term portfolio growth. So if you're considering purchasing, refinancing, or developing a self-storage facility, having access to a broad network of lenders can significantly improve your options and increase your chances of securing the most favorable terms available. And that, my friends, is it for the day. Thank you for watching. I hope you can go to my website, billrapp.comloan.com. You can schedule a consultation and start a pricing quote. Love to talk to you more. Thank you for watching. Have a good day.